CRC Credit Bureau Limited is one of the foremost credit bureaus in Nigeria, a leading global credit information service provider, with the purpose of operating a consumer and corporate bureau in Nigeria. It creates an industrial hub of information repository credit profile of corporate entities and consumers. As part of further deepening the culture of consumer lending in Nigeria, especially in non-oil and small-scale industrial sector, CRC and FICO brought together the relevant stakeholders in financial and non-financial sectors. The seminar, which was tagged CRC FICO Score, was held at Wheat Baker Hotel, Ikoyi. In his welcome address, Mr. Tunde Popola, MD and CEO of CRC, welcomed everyone present and further used the opportunity to educate all on core functions and achievement of CRC as regards Credit Bureau. He also explained the reason for the seminar.
My job today is just to welcome you, but in welcoming you, I just said, welcome everyone, and I just go and sit down. But I have to do beyond that. I have to do one or two things. First of all is to talk to the fact that growing consumer loans is the way we have to go in Nigeria. And I don't think I will be the one to be preaching to the bankers on this. You are all bankers and you know the importance. As we speak today, I think last week, Augusto & Co released its report for 2017. And shows that about 30% of loans in banking, in Nigeria banking, is from oil and gas. So if 30% from oil and gas alone, what's the contribution of oil and gas to GDP? What's the contribution of oil and gas to employment? They are very, very low. And so when we are looking at rising level of non-performing loans, there is no doubt that all banks that are deep in oil and gas will have been affected. So then we need to begin to look at the business model we are running. We need to begin to look at how we move from concentration of risks in just one sector of the economy to diversification of risk. How do we look forward to empowering millions of people who are very hardworking and who also have a high level of integrity to be able to begin to have access to credit? We know you need enablers. We know Credit Bureau is supposed to be an enabler. But Credit Bureau also have to bring products and services that will enable you to be able to identify credible people and minimize your risk or optimize your risk. So that's why we are here this morning, to be able to introduce to you the new product that we have that is going to assist you in moving to consumer loans. Now, CRC, as you all know, we're owned by a consortium of Nigerian banks together with Dun & Bradstreet. And we commenced operations we started in 2008, and we went live in 2009, precisely. And so there are about 11 banks, and then Dun & Bradstreet. And we had our annual launch in 2010. Maybe some of us in this room were at the launch, where we did our launch officially in 2010. It was done by the then governor of Central Bank, and it was a very momentous event. And since that time, we have not looked backwards. In 2009, when we started, we had less than 100,000 records in our repository. Today, we've moved to over 12 million records. And every year, we are moving in terms of number of records that we have in our repository. And it will continue to grow because our membership also continues to grow. I mean, in 2010, there were only 49 institutions that were submitting data to us. But today we have over 1,050, about over 1,000 institutions that have joined CRC Credit Bureau. And they covered various parts of the Nigerian economy. We have significantly Nigerian microfinance bank, over 800 of them have joined CRC out of our just 950 or so. So we had that market, that segment of the market, it's almost 100% coverage that we've experienced. And we're going to have the rest as well. And not just that, we have finance companies, we have mortgage banks, we have few mortgage banks in the hall here. We have all the commercial banks. The traditional method of lending, we have to find a way to deal with it. And how do you deal with it? You can only deal with it if we change the business model. And what we're going to be doing is to help you to change that business model that you have that will enable you to do millions of transactions every day, thousands of transactions every day, attending to thousands of borrowers every day. That's what bureaus are supposed to be doing in an economy. The bureau is supposed to empower you as lenders to be able to depersonalize access to credit. Whatever the customer is paying through you comes into our account with you, and then of course from the 2000 or 2005, we arrange a sharing revenue model that makes you to retain some of them as revenue for you, and then you give us the balance. So that's the kind of arrangement that we'll be working with some of you on. But we want as many as possible of all the banks to, adopt this and then run with it, because we all must make this access to credit work. Changer that we have brought to the country. We brought FICO Scores. Some of you already have your own customized solutions for scoring, okay? But this is Bureau Scores, and I won't go into the technicality of that, otherwise I'll be, taking up what my guest speakers will be doing today. But just for you to know that the partnership we have brought is the best in the world as we speak today. There is no any other credit scoring solution that is as popular, that is as authentic, that is as reliable credit and consumer credit in Nigeria, and it has come from the best source in the world, FICO. And so, ladies and gentlemen, I want to welcome you. I hope that by the time we are leaving here today, we all know that the era of we don't have the tools to lend, to do consumer lending, is gone forever in Nigeria. And we are so happy and we are so proud that we in CRC, we are bringing this to you.
In all the numerous consumers lending outfits, why the choice of FICO?
I've been with FICO for 14 years, worked at many different responsibilities or roles as it relates to, I'm just going to see if I can, is there another deck I should be getting to? Ask me when I'm in a good mood, whether you'd like to borrow a little money, I would probably say yes. When I'm busy and in a bad mood, you might get a bit of a different answer from me, right? And so we have as human beings these ups and downs. It becomes difficult when you look at a portfolio without something like a score to be able to assess what drove your decisions. What if you made not just a change in the score, but a change in the score in combination with a shift in pricing? What is the impact of that on the performance of the portfolio? And how do you segment your portfolio so that you only apply that change, for instance, to 5% of your loans, and then benchmark the performance of that 5% against the 95% or champion strategies, and make sure that you're very careful and articulated in managing and changing your policies. Fundamental to doing that is not just systems, but also scores. And not just the FICO score, but your scores as well. I'd like to repeat what Mr. Pohula said in the sense, for those of you here in the room today, today's conversation isn't about FICO scores versus your internal scores. FICO scores are meant to supplement your scores. They're meant to work together with your scores to help you improve the way you extend credit. And I hope that as Daniel goes through what he's going to share with you in his experiences, that he'll be able to help you understand exactly how. Okay. FICO does business globally. We do business, I'll share a little bit with you. We do business in over 100 countries worldwide. What many, and certainly when I came to South Africa, were surprised to know, and I'll just refer to South Africa, we've been doing business in South Africa for about 22 years now. South Africa is FICO's 4th largest country by revenue. The United States is our largest. The UK is next, followed by Canada, and South Africa is 4th. As a Canadian, I want to kick the Canadians' butt. All I need to do is double our business in South Africa. It's no small thing, but I'm sure we can do it. We just have to double our business in South Africa, and we will then be, we will have beaten Canada. So if you think of that in terms of scale and opportunity, and it is very possible. If I look at those 4 top countries, South Africa is the fastest growing by far. I'd like to take credit for that, but the honest truth of it is that I have to give credit for it to our market and to many of our partners that we work with. I'll share some of the things that we've done. I hope that Nigeria, as I know you guys do, because I know that there's ever since a couple years ago when it was announced that Nigeria was the largest economy in Africa. Being in South Africa, you can imagine all the hallway chit-chat that created. But I sincerely hope and want to support yourselves and Nigeria in, once again, becoming the largest economy in Africa in a currency-neutral term. And there's no doubt in anyone's mind, right, that it is not only possible, but inevitable. What we're responsible for as partners in that growth is to make sure that it's sustainable and it's robust growth. FICO provides over 100 billion scores today. It's one of our largest segments of our business and is one of the segments we're most proud of. Not just because of what it does for you, but also for what it does for, as I've said, the people who aren't sitting in this room, and that's your customers. There are 3 things in my view that I'm very passionate about in terms of developing markets. Number 1, we can't control. Perhaps some of you can. But it's sound economic policy, it's transparent and open markets and government. That's number 1. Once you have that in place, you need to then solve for education. Once you have education in place, broad-based, general education, there's nothing known to man that can drive economic growth as fast and as powerfully as access to credit. Once you can enable your consumer markets to responsibly have access to credit, not only will your portfolios grow, but the growth of this country will explode. It has to be done responsibly. It has to follow the best practices that we've learned through many, many decades of doing so in other countries. But you have the benefit of that pedigree. You don't have to make it up as you go. This is a proven formula. It works. It will work here as it has worked elsewhere. What is the FICO Score? As we've already mentioned, it is just a number. That's it. That's why it's such a powerful tool. It's a number that rank orders the risk of any credit-active population to reflect to you what is the likelihood of a consumer to default on a particular loan within 90 days. That's what it means to you. What does it mean to the consumer? As we launch this score, I'm hopeful that in Nigeria, the credit-active population, all of them, are going to get to know their credit score. It can become something that they talk about regularly, that they think about. Because what does it mean to them? It means if they move that number up 50 points, their house payment can come down by 5%. It means that the car that they would normally have to pay cash for, they can finance over a longer term and to good profit for you. The impact of this one number is incredible. And one of the reasons I encourage you to consider the use of a general score, like the FICO Score, is so that it becomes public. You all have, let's just say, most of you will have some manner of in-house custom score that you base your portfolio lending on. Can you really engage with your customers in a robust discussion about their creditworthiness based on a number that they can't relate to? They can't associate to their personal life. They don't know how to manage it over time. Do they need to knock on your door every time they want to find out whether that score moves, either positively or negatively? That's the service we provide.
The guest speakers further explained how this partnership and products can add value to our business enclave.
The concept of the credit risk score is to separate the goods from the bads. Goods of what? On the probability that they have to not pay you. And the probability can change with the macroeconomics. Of course they can, but not a history. So what you might have on those situations that you go from one macroeconomic situation to a bad economic situation is that you have a consumer that it's not that he is historically bad, but he suffered something different. So you can track this on which ways? Profession, industry, zone, macroeconomic situation. So you can do different things on this score because you have this consistency. Another point that you also have is the transparency. And this is one point that Derek discussed quite a lot, and it's really true. So what can I do to improve my score? I don't know. What can I do? So with the reason codes you have outside of a FICO score, you can do credit counseling. A service that if you provide credit counseling to your consumers, there will be two things. First is that your risk will decrease exponentially. The reality is every time that we risk managers need something from technology, what is the answer? Oh, yeah, you can have this in 1 year. Do you have the budget? Do you have is this really needed? And the benefit that you have with the FICO score together with CRC is that using a proven technology, you will have this in a seamless way, not that hardship to connect the data itself. I have a definition of a bad. So for us in this score, a bad customer is the one that goes 90 days past due or have the probability to go 9 days past due in the next 6 months. Okay? So using this, I pick my bets. And what I have to do is to create a formula, mathematical formula, to identify who have the probability to go bad in the next 6 months and compare with the ones that will not go bad. The benefit that we have is that how big is the problem here is 11%. So you pick 11% of the population that goes bad in Nigeria, and then try to understand what kind of variables and what kind of a personal behavior brings me to say that you have the probability to be on that 11%. But the benefits that we have almost 80% on the good side. So how you can separate that? And this is the formula you have. The formula that ends with this separates two populations. And you have some statistical factors or key indicators that to provide that. One of them is the Gini coefficient, that if the Gini coefficient is 1, you have the perfect separation. So there is no difference between one population and other population. Believe me, this is really hard. To go to closer to 90%, you have to have a really historical data and really profound differentiations on those portfolios. It's like, for example, if you are evaluating portfolios of credit cards against auto loans, cumulative of goods, and I have my percentage cumulative of bads. So what happens is that if I approve everybody that comes in, I will have 100% of my goods and 100% of my bads. This is not what we want. As risk managers, we want to have 0% of bads. But at the same time, I will have 0% of goods. So the concept here is to define my risk appetite. And the risk appetite is defined by putting a cutoff on this score. So if I want to have the cumulative of bets of 30%, how big will be my cutoff point in order to have a different way of viewing my score here? So how can I play with this process in order to understand my risk appetite? What kind of factors will have a customer that I can declare my love to him? So how can I tell someone, I do really love that, you? My wife still asks me, why you selected me? And I don't have a score for that, but yes, you know, but the reality is that there are some factors that we understand that I love you as a consumer or not. And the score plays that process. This is the way that you have to consider the score. The score is the one that will give you the understanding if this probability of that consumer is good or not. And believe me, one day I started trying to tell my wife about probabilities and said to her that, you know, the probability that you were a good cook, a loving mother, and when I started talking about probabilities and I said to her that, you know, I did a score and your Gini calculation, oh wow, I had to travel. So at that time I went to, if I'm not mistaken, I went to China and spent there 2 weeks, and always calling my daughters and saying that, how's mom? Is she still thinking about mathematics? But even though the process on score is to benefit, is to bring you the benefit of a good and proper decision. So how can you have a benefit using the CRC data score? When we think about the concept of the impairment and how I play with the impairment across IFRS 9, of course that's the way you do that is understanding the risk, the inherited risk you have on that portfolio. As you have a tool like a credit score or a FICO score, you will be able to understand better the way that you play with this impairment calculation in order to understand if this is a portfolio stage 1 or stage 2 on IFRS 9. When I consider the coverage of capital and I needed to calculate, for example, estimated risk, or I needed to calculate the PD or the EAD or the LGD, when I have a score to base that calculation, and I understand and I can translate the goods and bads in terms of a 90 days past due to a proper loss default or probability of default, you are calculating a very important thing that do change a lot of your consumption of capital and consumption of provisions in a very proper way. So this is something that brings to you the capability to be more compliant and transparent. Another point is that when I'm using the score to do that, I access an underlying data that you don't have because belongs to the Bureau, data that you don't have access because belongs to the Bureau, but you are accessing this in a number. And this number brings also to you the capability to reduce your operational costs and reduce your volume of manual interactions. Simplifier saw that power of precision in one single room, believe me. And they had the senior guy. And the senior guy was the one that was responsible for, training the others. I'm a lawyer. Okay, nobody's perfect, but yes, I am a lawyer. And this gentleman, the senior guy, had a problem with lawyers when he approved 10 years ago some lawyers for consumer credit. So when you look to the analysis that they had from that center, 200 credit analysts were not approving lawyers. Why? Because the training was provided for someone that hates lawyers. So no lawyers on that region. So this is the proper way to do that. So I will discuss a few areas here. So I will discuss originations, I will discuss the underwriting, the account management, and the collections. And every single one of them, you have benefits on adoption of a process with a score. In this case, the FICO score. So how can you do more effective decisions to approve and decline an application. So how can I decide if this is a consumer that I will really love being with me? How can I do tier pricing and different interest rates to my consumer to fit not just the application profile, but also to justify that if I do have a bigger risk, I need a bigger price. If I have a lower risk, I can give a lower price. So it's a question also to retain and maintain consumers at your side. It's a question to understand how can I provide the proper service to this consumer, a part of what he is asking me to provide. When I look into account management, I have the capability to do account monitoring. What kind of approval and decline have you had, and what is the bad rate that you pay with your FICO score? And on this situation with the swap set comparison, you can have a better way to understand your bad rate, your future bad rate, and your decline bad rate, bringing to you the capability of dual scores with better approval and reduced bad rate. So the benefits that you have, if you do have or not an existing credit score or a behavior score, with the FICO score, you'll be able to do everything that I discussed. And I will be more than happy, not just right now, but after today, and I promise that I will be here more often also to provide workshops with you. This is one of the next steps that FICO will promote. Together with CRC, we are planning to have a half a day or entire day workshops on how to apply the FICO score to help you with best practice. We also will publish a series of documents that will provide for you some best practices.
What is the reaction of the participants?
What we found that the CRC is coming in a very right time when we are all witnessing economic downturn since last year. A lot of consumer, due to the liquidity crunch, will be going for credit and be seeking credit, So this is a very good time for CRC to come into the picture, and it's going to help a lot of businesses, financial institutions to have a credit ratings of the customers who are willing to go for the credit, and they'll be able to create a conducive business environment for the credit business.
Like they said that focus will be on those that we have in the system at present, that is the consumers, that they have their credit record. But how they will get the record for those that does not have credit record is my worry, my concern. So I don't know, really, I don't know how they can go about that, because I'm just thinking, would they just approach people on the road to gather information or what? Yeah. I think what needs to be done, like what CBN has, been emphasizing, is this financial inclusion thing, sensitizing the unbanked public, to patronize or to patronize the banks or other financial institutions such that they can have their record.
In summary, what exactly is this partnership set to achieve?
We have partnered with Dun & Bradstreet for the Credit Bureau application, software application, and for technical support for the issue of credit report. Now, when we decided we are going to bring credit scores to Nigeria, we looked for who is the best in the market in the world, and we identified FICO. FICO has been around for over 50 years. They are the #1 credit score provider in Nigeria. They generate about 10 billion credit scores in the world, 100 billion credit scores in the world annually, and they are in about 90 countries of the world. So Nigeria should have nothing less than the best when it comes to products, and there is no point reinventing the wheel. When you have players who have done it well in other jurisdictions, Nigeria should just leverage on that, and that's what CRC has done.
How do you feel partnering with CRC?
So we're really excited about the opportunity for Nigeria just to get access to a tool, right, that's going to help provide some insights for the bankers and for the credit lenders within this market to begin to tap into and unlock the latent growth that's going to exist within the retail segments within the Nigerian population. We've been working with the CRC for over a year now. We've developed a really good relationship with their management team. We're really excited about the quality of their data, about the objectives that they have in Nigeria in terms of promoting healthy credit, consumer lending, and we're really excited about it. We've got a great relationship with them across several layers of management, and I have every confidence as we've worked across many countries globally that our relationship with the CRC is going to yield fruit, not just for ourselves, for them, for the central bank, but also for the people of Nigeria.
We can have the cheapest credit as they have today. Because with the FICO Score, the banks will understand the risk-related decisions that they have to take and what kind of a price they have to put for the risk. So lower risk customers will have better rates. That will also increase the economy, increase the cycle, and this is good for everybody.
What do you think is the future of credit bureau and consumer lending in Nigeria?
We believe that with this, it's going to be cheaper for us to adopt. It's going to be cheaper for consumers and lenders as well. Secondly, we are leveraging on expertise that has been tested all over the world. And thirdly, is the fact that we are also leveraging on technical support from them as well. And so with all of these factors.
What is the next level for these two bodies?
As we have launched this today, we've launched credit score based on credit bureau data. The next level will begin to look at how can we generate credit scores even for those who do not have information, who have not borrowed before. And so that will be looking at non-credit data. We'll begin to study non-credit data in the Nigeria space and see how we can use that to generate score so that we can further enhance financial inclusion in the Nigerian space.
We wish CRC and FICO Score a viable business venture.